Hello, everyone, and welcome back to Crypto's News. It is me, your host, Omar Bam. It's a pleasure to have you. We are going to be going ahead and getting into what is happening in cryptocurrency today, as usual. So happy to have you back. Thank you for the long time support for my long time viewers. Those of you guys who support on Patreon, those of you guys who show up to the live streams, and those of you guys who just watch whenever you can. It means a great deal to me. I did mention in the last video that you guys could sign up for channel memberships so you could support the show that way here on YouTube. And it turns out I hadn't finished the last step to enable the button. So thank you for the message. Who was it? The individual who messaged me and let me know that. Azam. Yeah, thank you so much, Azam, for letting me know that I hadn't really enabled that yet. But it is enabled now if you had problems getting it up. But we are going to be going ahead and starting off with the prices in just a moment on this nice happy Friday. We're going to be talking about the central bank digital currency that was tested today here in the United States, and we'll be looking at some other stuff, so stay tuned. Let's start off with the prices as usual. We have Bitcoin having a really nice day. Actually, most cryptocurrencies having a nice day. As you can see, Bitcoin up 4.8%, breaching the $21,000 barrier, straight to the moon. $21,153.48. You also have Ethereum up nicely, 7.4% at $1,643. And Matic has continued to pile on the gains. We talked about it a little bit yesterday, and they are now up 22.7% again on the day, 28.6% on the week. So in the top few coins, that's really the number one player here. But these are some of the biggest gains that we've had in a little while. I think this is a lot of just rebounding from the market, digesting the Fed news maybe a little bit too negatively yesterday, and today just continuing the party that it wanted to have before. I have not been minting Zen number of things. Have you been minting Zen? Who else is minting Zen? Is it worth it? Do you think it's really going to be worth it? I don't know, man. I can't really see the value proposition just yet, but I might really be missing something, number of things. So let me know. So let's, oh, look at that ETH dominance at 18%, Bitcoin at 36.9%. I still hear from some folks that Bitcoin might reach the dominance that it had before of around 68 to 70%, but to me that seems a little bit more unlikely. There are more coins than ever, 13,281 listed here on CoinGecko, and many more that are not listed here on CoinGecko. So a lot of that just gets distributed into a bigger pie with more slices, that is, not necessarily the pie. But I do wonder if Bitcoin will have some sort of resurgence. Maybe the halvening will be the driver of that. Like, I remember during the bull market, a lot of what people were suspecting, myself even included, was that Bitcoin would be the number one place to be during the crash. And I guess it kind of was, right? It didn't really drop as much as Ethereum did at the bottoms. But if you're trying to accrue in a position before the bull market, usually you want to be getting into altcoins. And the data has just shown that to be the case time and time again. So yeah, feel free to share if there's something that you're looking into. I know people are beginning to publish reports on what they find as far as tokens, and I'll keep a lookout for anything that seems like an overperformer. Like, I'm hearing about a lot of NFT platforms, for example, but to me those are almost too specific. I'd rather get something a little bit more broad. There's so much competition right now in the NFT space that it's difficult to like pick one main player there. But if you get it right, you're going to do quite well. But personally, I like to focus on like monopolies. Innovative monopolies are usually a really nice way to go. So if you found something like that, feel free to share with the community. Let's go ahead and go into the chart here. I wanted to take a look here at the Ethereum versus USD chart. It performed quite well against Bitcoin today. But, and yes, we do focus a lot on Ethereum here on the show. If you are not familiar, this was originally called Ethereum News, the show, when I launched it in June 2016. And eventually I decided to focus more on wider cryptocurrency as well, just have more to chat about and to not miss something. I didn't want to be dogmatic. But Ethereum is still, I think, my favorite preferred holding as far as a safe bet. Like the best foundations you generally want to have are a Bitcoin and Ethereum if you want to have the safest in an unsafe environment, right? Unsafe environment. I think fiat is what's unsafe, but it's neither here nor there. So what I'm looking at here right now is the moving averages. I'm looking at the 50-day moving average, a shorter term one, and the 200-day moving average. And notably, what I'm finding here is that we are seeing it tick up a little bit here on the 200-day moving average. If this red line, the 200-day moving average, crosses above the blue line, this would be quite bullish. It generally is been seen as a golden cross or the beginning of a bull market, just a signal that things could be headed with more strength to the upside. So it has been quite negative since the reverse happened. We had the red line cross below the blue line, or the 200-day moving average cross below the 50-day moving average, and that just portended further and further downside, which is what we've seen. But now, and this has been a signal I guess I've been waiting for more, is that we see this get a little bit tighter. We have the 50-day getting closer to the 200-day. And in fact, we're seeing here that the 200-day is ticking up because of the price increases we've had recently. Even with some of the hawkish talk that we got from the Fed yesterday, we're still seeing today a really nice bounce in prices. So could this be the bottom? I guess we may soon find out. And if it does happen to be the case that this does cross over, right, the red line over the blue line, and I'm not saying it's going to happen right away, but it just could be a sign that you might want to be accumulating, then take a look at some of these gains. Hey, what's up, Kyle? Good to see you, man. Yeah, it would be super nice to see some positivity, man, after everything that's happened with Celsius and Terra and Luna and just prices overall. It's been a rather negative market. I think people have kind of turned on each other. You see a lot of that on Twitter. I'd prefer to see the positive discourse when people are a little bit more positive. So that this kind of day, I guess, is good for that. Anyway, if you take a look at here on May 2020, and you're looking, and again, this is the Ethereum chart, you're looking at like May 14th, 2020, where you saw the 200-day, cross over the 50-day. Then take a look at the price of ETH back then. It was around $174. And if you didn't sell here in August 2021 when it briefly touched that line, but you actually sold at the proper death cross over here, then Ethereum went from that very low price all the way up to $3,500 basically. So massive gains. I'm not doing the math right now to look at the multiples, but you can see that. That was again from, what was it again? 175 to 3,500, many multiples. Feel free to share that if you guys want in the chat. So, I mean, that's the kind of thing you could expect if we did get some sort of golden cross again. And that was the only golden cross basically that just took us higher and higher. So could be a sign that we could be getting closer to an end here. I know many people are feeling like, I saw your prediction as well, Kyle, for what you were expecting. I think it was you, right, that was posting on Twitter about some of the gains you were expecting in 2023. And I also feel like that's when things will really start to appear a little bit more bullish to the average person. But we're trying to, of course, follow this as much as possible and be early. So just that little slight curve to me is something that's looking quite positive, as you have the 50-day still kind of flattening out, if not still continuing lower, and you have the 200-day coming higher. That golden cross could be sooner than ever. I did write this as well. I was just thinking out loud, shower thoughts last night, but you have the M2 money supply, which basically looks at everything that's M1 money supply, plus things like savings accounts, some funds that are in money markets. And you'll have basically the supply of money that is liquid out there and investable, and it is larger than it was the last time. Looking at the chart, you can find that at the Federal Reserve of St. Louis website. I'm not pulling it up right now, but it is higher right now than it was back when Bitcoin was at $60,000. So to me, it's not unimaginable that we see Bitcoin hit $60,000 again. But again, that is assuming that people who get in again want to be buying Bitcoin. So it could be, for example, maximalists that are smart, or they only buy Bitcoin for whatever reason, and they are waiting on the sidelines with some of the money market funds to buy back in. Or it could be I don't know, some sort of value proposition for Bitcoin that suddenly appears a lot more clear. It just decouples from stocks or something that are trending down, while other cryptos then just show more correlation, for example, with that, and Bitcoin breaks by itself above that. I find those to be scenarios that are a little bit more difficult to imagine than people trying to involve themselves and invest themselves in the latest and greatest Ethereum, right? They're trying to get into the next Solana. They're trying to get into, I mean, you name whatever project it is, and it's just cheaper. So I think that the herd generally wants to see huge gains. That's why you see Cardano getting a lot of interest. Not necessarily that it's still the case. I'm just talking about when it first came out, right? A lot of that was trying to compete with with Ethereum, really specifically. And I think it'll continue to be the case where you have interest going into other things than Bitcoin. So Bitcoin, I think, is going to have to prove itself here. Its security model is going to have to prove itself if the price stays somewhat flat. But anyway, if somehow it's not unimaginable that it would get back to $60,000. Although in that scenario, I imagine like Ether would be much, much higher. I'm personally looking at ultrasound.money. You're seeing the burn rate. You're looking at the deflation rate. You're talking about the amount of ETH that would have been issued had we stayed on proof of work. And yet you've seen in the past, even with the amount that was issued before, security that Ethereum was paying, you still had these huge multiplying gains, including in the last bull run. So imagine when you have this triple halvening scenario that has come out for Ethereum and the issuance rate. Proof of stake now on board for, again, the biggest smart contract platform, the biggest development lead, and the biggest mainstream attention from governments and countries. Basically, right after Bitcoin comes Ethereum. And to me, it's still looking like the best bet if you want a safer bet going into the next thing. Of course, this is an opinion. I'm not telling you guys what to. I didn't mean to delete your chat, OG Foundation. That should not have happened. I don't know why it got deleted. I have like zero moderation on the show, to be honest, right now. But anyway, yeah, so I'm personally sticking with ETH as we go forward here as one of the better, safer bets. And we did get this updated roadmap just posted by Vitalik on Twitter. It goes on into all the phases that are currently being developed for Ethereum to come up next after the merge. So on the left, you have the past, right? And we move towards the right, which is the future. And you kind of see steps for all of these different phases of Ethereum. But the thing is that all these phases of Ethereum, as Vitalik has said before, are happening and being developed in parallel. So it's not like first the merge, then the surge, then the scourge. No, they're all basically being developed at the same time. So I'll just go through them, basically what we're expected to look forward to here. It starts with with the merge, which we just did. The goal is have an ideal, simple, robust, and decentralized proof of stake consensus. We have the surge here, goal, get to 100,000 transactions per second and beyond using rollups, of course. The scourge, so ensure reliable and credibly neutral transaction inclusion and avoid centralization and other protocol risks from MEV, something that a lot of the crypto community has hyper-focused on recently, and not necessarily without reason, right? Just looking at how you have these censored transactions that are taking longer to be included on Ethereum because of what the treasury basically said, and not any sort of official rule, but just in case you have these relayers like Flashbots that are not including certain transactions. So this might help with that. You have the Verge, verifying blocks with this should be super easy. Download N bytes of data, perform a few basic computations, verify a snark, and you're done. The Purge, simplify the protocol, eliminate technical debt, and limit costs of participating in the network by clearing old history. That should make it even easier to be a validator and maybe even lower costs and fees and so on. And you have the Splurge, fix everything else, basically. So this is kind of a far cry from when Ethereum was first pitched, or when I at least first got involved with Ethereum, was with this idea of creating the internet all over again without having these centralized silos in the center, and having like a web browser very much like you might see the deep web browser, right? Like when you try to access the deep web, you need to download the Tor browser to open these .onion links, and then you get access to way more internet than you can access on your Brave browsers or Google Chrome browser or whatever you're using, Safari. But anyway, there's someone. So the idea was basically you'd have like this new model of the web where you would log in with your private keys. You have all these different applications, not just like finance applications, but all sorts of things, just like with the regular internet, without these intermediaries in the center. And I guess we would have ISPs in some sort of way, but ideally it would be nice if we didn't have ISPs, internet service providers. But anyway, someone has refuted that what Ethereum is doing is Web3 at all, and maybe it just isn't the case anymore. As we just looked at the roadmap, it doesn't necessarily talk about like the Mist browser or having some sort of browser like that would allow you to access that. Although there's a lot of work going on to create all these different things from different teams, and maybe some sort of comprehensive package can still happen in the future. The Mist browser, which was that original idea, did stop being developed, although it was super cool. I could even see like CryptoPunks right within my wallet there. You could see the little icon. It was really interesting. But anyway, the creator of not the creator, but he's been named as the founder of the World Wide Web, not just the internet, but the World Wide Web. Tim Berners-Lee, he has said at a Web Summit tech conference in Lisbon that he doesn't think what all these projects marketing Web3 as are really Web3 at all. He actually goes on to even shame Ethereum kind of. He said it's a real shame, in fact, that the actual Web3 name was taken by Ethereum folks for the stuff they're doing with blockchain. In fact, Web3 is not the web at all. So basically, Web3 is going to involve a few technologies, including blockchain, cryptocurrencies, and non-fungible tokens. That's kind of what it's become. But he's not convinced that it's going to be able to do anything with these protocols as they exist. He said blockchain protocols may be good for some things, but they're not good for Solid, which is his own project. Apparently, they raised quite a bit of money. They raised $30 million Solid in a funding round in December, according to TechCrunch. Although I'm looking currently at a CNBC article. But he said that blockchain protocols are not going to work for Solid, which is his attempt at not Web3, but Web 3.0. So he said blockchain protocols are too slow, too expensive, and too public. Personal data stores have to be fast, cheap, and private. I rather agree with that. It would be really cool to see some sort of solution come out that fixes all of this, right? Ignore the Web3 stuff, he said. Random Web3 that was built on blockchain, we're not using that for Solid. His startup, Solid, it says here, hopes to have a global single sign-on feature that lets anyone log in from anywhere, login IDs that allow users to share their data with others, and a common universal API or application programming interface that lets apps pull data from any source. So it looks like Tim Berners-Lee is going to have quite a bit of competition. I mean, just the other day, we were looking at the Web 5 project that Jack Dorsey was supporting, and let's see it. Let's see what happens. Let's see which one of these takes off. A lot of competition, and it goes against my idea of like investing in something that isn't some sort of monopoly or isn't innovating in some sort of crazy way. But maybe he will pull it off. Well, I guess we'll have to wait and see. So a lot of what's going on with Twitter, a lot of continued drama since Elon Musk has taken over. It's come out that, and just wanted to give you a bit of an update there, the crypto wallet. This was announced yesterday, but I didn't get a chance to talk about it. The crypto wallet that was supposedly under development. We first heard about it on October 25th. So pretty recently that apparently Twitter was working on some sort of crypto wallet that would allow sending features. And then suddenly Elon Musk was taking over. So a lot of expectations that would be like first a Dogecoin wallet. You saw Dogecoin pump a lot, but it's down 10% since it's come out that ahead of other things, Elon Musk may have put on hold the crypto wallet. It appears to be on pause. Instead, it looks like first we're going to be getting those that Twitter Blue upgrade, where it's going to be $8 now. You can get your check mark next to your name. You can, and also Vine. Apparently, they're trying to revive Vine, which was like the original TikTok. I remember using Vine. I thought it was really, really cool when it first came out. I was like anti-TikTok because I thought it was just a straight ripoff of Vine. But anyway, we'll see what comes up with that. There's also other things like you might have to pay in order to DM some sort of accounts that you follow on Twitter. It looks like Elon is heavily focusing on trying to monetize the platform since they're just burning money. Although we haven't really heard anything about Twitter and their NFT feature. So we talked about recently the tweet tiles. They would have information about. There were like 4 different platforms that might integrate with this, and if you put some sort of link to one of these platforms, you would see information about that NFT. That was linked to that marketplace on Twitter directly that could allow you to buy and sell. So we don't know if that's still coming or not. I haven't really heard anything about that. Elon Musk just tweeted this a little while ago, right before I went live, regarding, so this is about the 50% of staff that he fired today. Regarding Twitter's reduction in force, unfortunately, there is no choice when the company is losing over $4 million a day. Everyone exited was offered 3 months of severance, which is 50% more than legally required. It's interesting that this information is coming out now, since all I've heard about is employees supposedly suing Elon Musk since he didn't give proper notice before firing or laying off or whatever 50% of the staff. But it looks like they were offered some sort of option of a 3-month severance. So I don't know if that changes things. It's a little bit of a heads up on some of the Twitter drama, since that's where a lot of the crypto information is disseminated nowadays. It went from Bitcoin Talk to Reddit to Twitter, and still trying to figure out where it's going to go next. Maybe it'll be Parler. I don't know. Maybe we'll be using Ye's platform after everyone moves off Twitter. Although I kind of doubt it. I guess it could be the case. Weirder things have happened. Anyway, this is being remarked about everywhere. It's kind of a little bit of a nothing news to me. But yeah, Walmart is allowing you to buy all sorts of miners. You can buy Bitcoin miners, the Ant miners, S19J Pros. You can buy Litecoin miners. So everyone is like, wow, look, you can go to Walmart. Eric Voorhees was like, wow, this would have been a huge headline back in 2011. But it is silly because it's just a third party. As you can see here, Radiance, and there are a bunch of other third parties that are just selling through Walmart that is fulfilling this, maybe offering payment processing, etc., and the listing on their website. So it's not necessarily like Walmart selling these. It doesn't mean you can go into your local Walmart store and order one. I don't believe you can have it delivered to your local Walmart and buy it there. I know I can't, because I believe, and I could be wrong, but Walmarts are actually legal here in Los Angeles in order to help small business. So there aren't any Walmarts at all even close to me. So I know it couldn't be the case, but I guess there might be one nearby. It says free shipping arrives Tuesday, November 8th. So only 4 days, though, to get one of these devices. So at least they're fulfilled rather quickly. But it's not really like Walmart is going to be talking about, hey, are you into mining? Buy the latest miner at your store in some sort of commercial. So, just crypto media doing crypto media. Anyway, oh yeah, look, there's one in Burbank Supercenter. Cool. There is a Walmart nearby somewhat. So the Federal Reserve Bank of New York, which is, even though they're supposed to be ranked about the same, all the different reserve banks, or the Fed's different branches of their bank, central bank, they're supposed to have kind of equal weight. It's not really the case. The Federal Reserve Bank of New York is seen as kind of the leader of the central banks. And they have tested out this Project Cedar they've announced, and they just finished phase 1. They posted on newyorkfed.org. It says here, Project Cedar, improving cross-border payments with blockchain technology. So they have tested out a wholesale central bank digital currency, or a WCBDC. This is a multi-phase research effort they've talked about, and it's not necessarily picked to be like the central bank digital currency that we're all going to be using. In fact, it's unlikely we'll be using this one, but it is more for wholesale purposes. It's to improve speed, cost, and access to wholesale cross-border payments markets. For example, with FX exchange spot transactions that can take a very long time. Normally, it can take around 2 days, for example, for these FX spot transactions to settle between different institutions. So this is basically a central bank digital currency whereby you would have central banks around the world, private sector banks, corporations, and other institutions all over the place, basically running their own node and plugging into this network, not for you and I to really run our own node and issue this thing, but it would allow them to have almost instantaneous payments. You're looking at about 15 seconds on average or under. It would use blockchain, as it says here. So it's going to use UTXO model, like Bitcoin unspent transaction output. It would be a permission blockchain network. So again, not just anyone can run this thing. And it would use Rust as a primary programming language. Looks like it was a success, but they'd still have to basically get central banks around the world to agree with this. And maybe they would. I can't see why they necessarily wouldn't. But just wanted to remark on this. This isn't something that's going to upend your life here in America and force you onto it and kind of invade your privacy. It's basically just another way to wire funds between institutions around the world. So I wouldn't be too scared of this just yet. And also, I found this super interesting. I shared it on Twitter. This was on news.bitcoin.com. Chinese government releases VR research plan, including metaverse and odor simulation. To me, that captured me because odor simulation is something that has been seen by technologists, biologists, people, scientists as something that is extremely difficult, if not impossible. Although, you'll always hear those people say that nothing is impossible. And surely there are people working on this, and I'm super interested to see the research on that. But odor simulation, so the Chinese government is basically hoping to make 25 million VR devices every single year until 2026. So something like 300 million devices. No, I'm sorry, actually less than that. We're talking about 3 years basically, so like 75 million headset devices and give them out to citizens. They want to make these devices better than they've been before with gesture tracking, eye tracking, expression tracking. Surely they're going to mine that data, right? Full body motion capture, immersive sound field. Ooh, now they're getting me excited. High precision environmental understanding and 3D reconstruction technology, and including odor simulation. That would be a huge leap in technology if they pull that one off. They're going to be opening supposedly 10 VR parks with this announced plan around the country to allow people to get involved with this technology and explore what can be done with VR. But I think it makes sense because regardless of having like Meta burning money, billions and billions of dollars at the metaverse, trying to create their own metaverse, it kind of goes against the very definition of metaverse when you have one company creating the metaverse. The metaverse is a metaverse because it's kind of like a bunch of different verses, right? So it would ideally think, I would think a metaverse be interoperable. It would not be controlled by one central party, let alone maybe even one central protocol. It would be a way to just jump between different worlds in different ways. But anyway, I think that they realize that there is a huge advantage here when it comes to workplace benefits, when it comes to productivity in other ways for their citizens as we move into the future here. And so I don't know how much, it's not outlined here how much they're going to be spending on this, but now it's not just one company, it's one of the largest countries in the world, right? Which with a lot of clout that is getting involved here with the metaverse, VR, AR technology. So I think it'll be something to follow for sure, and it could inspire other countries to do the same. I would wonder how this really upends how we interact, how we do payments with cryptocurrencies and everything else. If more and more people are given devices for free or something like that, and there are more opportunities in these kinds of worlds to live your life and earn and everything else. Anyway, I'll leave you with that. And I'll also leave, and thank you so much guys for showing up, for making it out to the stream. Again, if you want to support the show, you can always send a tip, and you can always now join the YouTube memberships that are enabled. It would be huge help, and I thank you for that, so we can continue to make content. Here's our quote of the day. There are two ways of spreading light, which one being the candle. You can be the candle to spread light, or you can be the mirror that reflects it, by Edith Wharton. Cool. Take care, everyone. Much love. Have a fantastic weekend and stay cryptic. Peace.